When I first started trading, I was like many of you. I had a full-time job, a lot of the responsibilities, and barely any free time left for trading. I couldn't sit in front of charts for hours and analyze the market all day long. But I really wanted to start earning, even with my tight schedule. That's exactly when I found this strategy. Simple, clear, and most importantly, fast. Just 15 minutes a day. That's all I needed to analyze the market, open trades, and continue the rest of my day. In this video, I'm going to show you step by step how this strategy works. The exact one that helped me when I was just starting my trading journey. We'll be using only 2 indicators. I'll show you how to set them up, how to find entry points, and what to focus on to avoid blowing up your account. I'll also give you the small but important details that helped me when I was just starting. So let's get started. I'm sure that this video will become the first step to your consistent trading. So guys, here is our pocket option account. I have $1,000 on my balance. The time of the expiration is going to be 1 minute, and I'm going to put 10% of my deposit per trade because we just have like 15 minutes per day, right? And with just 1% of our deposit per trade, we're not going to make that much result. So firstly, I choose moving average and I change the period to, I change it to 50 and the moving average to EMA. So we'll leave the color the same. Then we choose stochastic oscillator. Here it is. And in stochastic wouldn't change anything. But a moving average, of course, we check the trend, or is the upward trend or downward trend. And also when the price crosses the moving average, it can also give us a signal. I will explain you more about this. And by stochastic oscillator, also we can see that it's 2 lines here. The 80 and 20 is the overbought and the oversold zone. It kind of looks alike with the RSI indicator. So if you use that before, you already know it. Also, we will use here the candlestick pattern. So when we see 3 candles by one color, for example, is here 3 green candles of one color. Here is the 4th one already, pretty big one by the way. And also we get a signal from the stochastic oscillator, right, that the 2 lines of stochastic crossing the upper line, the level 80, the overbought zone. So it's giving us pretty good buy signal. So yeah, and I use 10% of my deposit, so it's like $100. So here it could be just a corrective candle, the red one, or it could be the start of the downward trend and the start of the reversal. So it's better here to change the currency pair. Let's check it out. Here it's actually fluctuating too much. On the stochastic, we can see that 2 lines of stochastic is out of the overbought zone. So it could be like the start of the downward movement. But still, we cannot see here 3 candles by one color. So it's not that obvious and strong signal for opening trades in the downward direction. So here we can see 3 red candles. By all of the indicators, it's a signal down as well. And guys, for those who's watching this video right now and thinking this is all really great but so difficult, so I would never do it by myself, well, I have a solution for you. And if to be more clear, this is my Telegram channel with absolutely free signals on the pocket option. I will not tell you a lot about this. You can just go through the link and check it out all by yourself. And we continue trading. Okay, here is pretty good one actually. As we can see, it's 3 green candles, right? The price is above the moving average line. Also, stochastic oscillator in the oversold zone. So it's pretty good. It was out a little bit of the oversold zone because of 3 red candles before, but now it's reversing in the upward direction again. So it's pretty good situation. Let's wait a little bit for a good entry point and we will open a trade there. Now we open a trade up for 1 minute. So now it's reversed a little bit down. So let's do a rollover here because we have this kind of the opportunity. Why not? So as we can see, the time of our trade double up. Now it's reversed in the upward direction, so it's good. I think even for 1 minute we would close it in a plus. So guys, let's talk about the indicators that we use here. First of all, it's EMA 50. It's exponential moving average with period 50, and it shows the overall medium-term trend direction. So EMA 50 smooths out market noise and shows the main price direction. So it reacts faster to price changes than the SMA 50, simple moving average, because it gives more weight to recent candles. And how you can use EMA 50? So first of all, it's a trend filter. So if the price are candles above the EMA 50, this line is the sign of the uptrend. If the price below EMA 50, it's a medium trend downward, of course. And also, for example, if you're trading support resistance levels, price action, or breakouts, it's safer to trade in the direction of EMA 50, of course. And as you can see, it's going pretty well. Okay, now some red candle happened on the charts. Sometimes this kind of situation happens and you're like, oh my God, what is going on? What should I do? But in case of something, we can always do a catch up, change the currency pair, change the time of the expiration as well, amount of money per trade, change the strategy or something else. Everything is working pretty smoothly. So you don't need to stick on the one chart, on the one time of the expiration or something else. You can always change it if the situation changed as well. So it's 15 seconds right now till the end. Okay, guys, let's go. And as you can see, it's already achieved the previous resistance level where our chart moved downward from. And either it would break this resistance level and go higher, or it will go lower. So yeah, we'll close this trade in the plus. Okay, perfect. We got our profit, so it's better to change the chart right now because again, it could go in the downward direction right now. And on the start of the reversal, it's pretty hard to work on. So here, let's change the time to 2 minutes and we're gonna open here a sell trade. So yeah, here we can see that our price already broke the previous support level. It went a little bit lower, not that much, but anyway. And we can see that one of the line of the stochastic already crossed the level 20, the oversold zone. The orange or the yellow line is just on the way to it. But as we can see, it already achieved the previous support level and even broke it. Oh, as you can see, it's really good. So now we just wait for the end of the trade. Yeah, and about the EMA 50, we're gonna keep talking. So also you can use EMA 50 as the dynamic support and resistance. So in uptrends, EMA 50 often acts as a dynamic support, and in the downtrend, EMA 50 may act as dynamic resistance. So sometimes EMA gives a good pullback entries within the trend. So also need to pay attention to that. Also, the EMA could be a great combination with the other indicators. For example, it works great with the faster EMAs like EMA 9 or EMA 20 for catching crossovers. And you can also combine it with RSI, of course, Bollinger Bands, key levels, or candlestick patterns, or for example, with stochastic oscillator as well. And now it's 10 seconds, guys, till the end of our trade. Let's see. It's reversed a little bit for 2 candles, but now it went lower again. It's 3, 2, 1. So we were on time. We closed this trade in the plus, guys. Okay, perfect. It's already 2 trades in a plus in a row. I think this is great result. So now let's find something else. And yeah, we can see that we opened here a buy trade for 2 minutes. Okay, perfect. Of course, here's still some risk because just a little bit of distance, you know, the time till the previous resistance level, and our price can just achieve it and then, you know, go in the downward direction again. So we will not be able to close the trade in the plus. And now it's like standing on the same place. It's not moving at all. It's not moving at all. Oh my God, what is going on? Sometimes it happens. Okay, now it's moving better. Okay, now we're in the plus, but it's not that active as I want it to be. Now we're like in the zero. Okay, it's pretty interesting. But at the same time, like, I'm really glad that on the videos I can show you more difficult situations. So if you would face them, so here, as you can see, I still can open the rollover, but really soon I will lose this opportunity. Here it is. Because you can open the rollover only in the first like half of your trade. So for example, if it's 2 minutes, in the first 1 minute of your trade, you can open rollover when the price is lower than your entry point where you open a trade. And after that, nothing. So we didn't do that. Okay, it's fine. Even if we don't close it, we can always open the catch-ups, of course. So it's 30 seconds right now. We're still not in the plus. We're like in the zero. Okay, now in the plus, plus 4 points, plus 5. Okay, that's pretty scary. 20 seconds. Okay, guys, let's wait. Oh, okay, that's good. So it's really good here that we choose 2 minutes as the time of the expiration. So it's 5 seconds right now. 4, 3, 2, 1. Boom. We close it, guys. We close it in the plus. Okay, perfect. So let's find another situation. So here it's pretty interesting situation as well. It was a downward trend before with a lot of the fluctuation, then some upward trend, then lateral movement, and it was small candles with the small bodies and big shadows on the upper and then the lower as well. And now it's 3 green consistent candles with the long lower wicks in the candles on the first 2. So it's showing us that the sellers were trying to break this level, but they couldn't. But now I can see upper wick on the last candle. So let's just wait till this candle will end. And if the next one is going to be the green candle, we definitely going to open a buy trade, because by all of the indicators, it's definitely a buy signal. 2 lines of stochastic moving upward in the same direction. Let's actually change the amount to $300. And we're going to open a buy trade here. Boom, like this. It's a pretty good situation actually, and I'm sure that it will confidently go in the plus, because it was pretty strong downward trend before. Then it was some lateral movement when the buyers and sellers were fighting a lot, but now buyers definitely got the movement and got this currency pair, so they are winning. And that's why I'm pretty sure about this one. So yeah, and about EMA 50 is not a magic line. You know, it doesn't give the direct signals, but it gives you a context. First of all, which direction is safer to trade, also where increased volatility may appear, and helps avoid entering against the main trend. Ooh, now it's fluctuating a little bit. For making it more interesting, let's open a double up here. Why not for $300 as well? I'm sure that is going to reverse here. The volatility here is a little bit crazy, but I'm sure here everything is going to be fine. And about the stochastic escalator, guys, by the way, so it shows where the current price is located relative to its range over a specific period. So in an upward trend, price tends to close near the highs, and in a downtrend, price tends to close near the lows. So when the indicator goes above 80, market is the overbought. When it drops below 20, market is oversold. And this means price has moved far from its average range and may pull back. But we will talk about this right now as well. Because here we have 5 seconds, 4, 3, 2, 1. So it was a good risk. We closed 2 trades in the plus. We already have almost 2K on the balance. And I changed the time of the expiration to 5 minutes. And I also put all of the money that I have on my balance, $1,920 per one trade. So now I'm looking for the situation where I'm gonna open a trade and we will have our profit there. It's a big risk because we may lose all of the money. We made like $920 and I had $1,000 before we started. So here's pretty good situation, guys. So let's open here a buy trade for 5 minutes. Yeah, it's gonna be a little bit longer one than the previous one that we had, but here's pretty good situation, as you can see. Then the price achieved its new support level, creates a new one, and from there reversed in the upward direction already for like 5 green candles. Now the 2 lines of stochastic escalator cross the overbought zone of the stochastic, the line 80. But actually a lot of people think if the price is achieved the overbought zone, for example, that it definitely means that right now it's gonna reverse. But for example, in a strong trend, the line of stochastic escalator, or for example in the RSI indicator, is the same. So our price could be in the overbought or the oversold zone for a pretty long time. So you should not only pay your attention to this, but at the same time to other signs of reversal. If you don't have them, it doesn't mean anything actually. And here we use our rule, trend is your friend, so we are following it. So yeah, and stochastic as well doesn't guarantee reversal, so it only shows that price is relatively high or low compared to recent price action. That's it. So how do they signals from the stochastic? So first of all, it's classic pullback from zone. So if price enters 80 plus zone, you look for put entries. If price enters 20 minus zone, you look for call entries. But again, you need to take a look at the other signs of reversal. So it's usually also better to enter when stochastic starts exiting the zone for stronger confirmation as well, when it's, you know, doing this kind of the movement. And also, second of all, is crossovers of the two lines of stochastic, the blue one and the orange one. So when the fast line crosses the slow line, if it's from above, you open a sell trade. If it's from below, you open a buy trade. And also, crossovers inside overbought and oversold zones are really stronger. And we can see it actually on the chart. And now we can see that the two lines of stochastic a little bit crossing each other in the overbought zone. So it could be the start of the downward movement again. But I think we're gonna close this trade in almost like 2 minutes in the upward direction, and then it will reverse in the downward only. And also, third of all, how you can use this indicator is divergences. So if price makes a higher high, the stochastic makes a lower high, so it's bearish divergence. If the price makes a lower low, but stochastic makes a higher low, so it's bullish divergence. Maybe I will make the video sometimes about this, so I will explain you more. So what is the nuances also about this indicator? So don't use stochastic alone against strong trends. Also, in the strong moves, right, in the strong trends, it can stick in the 20 or 80 zones for a long time. So you need to avoid trading reversals during this. Fourth of all, always combined with levels, candlestick patterns, EMA, or support resistance zones, of course. So actually the perfect combo would be stochastic, then EMA 50 is like trend filter, then support resistance levels, but of course I'm analyzing it here just in the lift time, and also candlestick patterns, pin bars, engulfing, and more also that we use here. So guys, we just have 10 seconds to the end of our trade. We were on time for this reversal. So it's 4 seconds, 3, 2, 1. Boom. We made this great result, guys. We have $3,686 in just literally 15 minutes. So pretty good strategy. Of course, I was risking a lot as well. And for the last trade, I put like all of the money that I had per trade. But at the same time, with the small trades, with like $100, $200, I made like $900 of the profit. So it's pretty good, I think. And if you want to make the same, you can just practice the strategy on the pocket option. The link will be in the description of this video. And we will see each other on the next trading session. Bye-bye.